Hello traders, Mike Mohibi here. Today is 4th of August 2019 and market is closed. It's weekend and let's take a look what happened last week. Start with USD CHF. And by the way, if you haven't subscribed to my channel, please do subscribe and click on that bell icon so you will get notified as soon as I publish a video. And if you have any questions, please, there's a comment section below. You can ask any question you want and I will answer them ASAP. All right, let's start. This is USD CHF. As you can see, market is moving very good in USD CHF. Let's zoom in. So in the last 2 days, we had these two big bearish candles and finally it broke. If you draw a line, this is a kind of a trend line. It broke that, so this means that the market's gonna go lower than this, and probably it's gonna be lower than this low. So be ready for a very good trend at the moment. If your system generates a signal around here after this candle, when market opens on Monday, probably we're gonna have a little bit of moving back. So we are gonna have a bullish candle or something, but after that, probably we're gonna have a very good trade, almost like 130 pips to the lower low, and we're gonna have another one maybe down there. Let's zoom out a little bit. Yeah, we have a very strong resistance around this area, and the lowest one is about 250 pips lower. So yeah, let's see what happens on Monday, but this is a very good signal. I will get this trade. I have a couple of them. I don't want to get any more trades, but this one was very good. The other one, USD CAD, it formed a big pin bar here, though it's above the 21 moving average, and generally when it's above the 21 moving average, I take the long trades. I never get a sell trade, but this pin bar shows that the market's gonna go down, and the previous one was a big pin bar as well. Let's see. These two showed that the market, maybe they took all the stop losses, after this big bar here, all the traders got long and opened buy positions. Probably they went up and then came back down to take all the stops and trailing stops. So that's what the big banks do. Be careful. USD JPY, this is pretty obvious that the market kind of crashed, because after this, if you remember, we talked about these lows and finally the market made a higher low, and I said that if it makes a higher high, you're gonna see an uptrend. It kind of did. In this area, many traders started to go long, and no matter how far your stop loss was, lower than this, lower than the previous one, they made it. They took all the stops. That's what they do. And probably after this, market's gonna go back up and goes into the same trend that we were expecting. So Euro USD, I have this trade. As you can see here, there's a big pin bar here, and I thought that market's gonna come back up, which it did, and in a positive profit at the moment. I don't get a very long. My target is about 90 pips, 89 pips, so I'm gonna trail my stop, and my stop loss is 60 pips. So it's 1.5 to 1 reward to risk ratio, not bad. And I think trailing stop is half of that, so it's 90. My trailing stop's gonna be 45 pips. So if it goes halfway, I'm gonna be in break even and it's gonna work out. You can take this trade if you have a signal, but this pin bar is pretty good. Let's go to Euro AUD. This one was moving very good, and this big candle here, the negative, the bearish one, took the stops. That's what it is, and it went back up again. At the time now, it's on top. I don't know if you remember or not, maybe 3 weeks ago, 2 weeks ago, we talked about this head and shoulders here. If you remember, this was the neckline and the market went down. This pin bar here was a good entry. I entered after the close of the second candle after that pin bar, and I had a very good trade. I think I closed after this big bullish candle here. So I had a very nice trade. I think it was, let's see, yeah, 160-70 pips. I don't remember exactly, but this was a very good trade for me. But as you can see, market went back up. This head and shoulder didn't form exactly, didn't move. If the target was okay with this pattern, it's 220 pips. So after breaking this candle, it should go to 220 pips around there, but it didn't. It went halfway and it went back up again. So many people lost their trades. Euro CAD, this one is very choppy for the past month, and I don't think you can get a good trade in the daily. Euro JPY is the next one, which crashed. This, I think this was JPY pairs crashed. Let's see, USD JPY, yes. GBP JPY, yeah. And the last one is CAD JPY. See, all of them have these two big bearish candles. This shows that I don't check the news, never, but whatever it was about the JPY. So yeah, if you follow the news, you could get a good trade, but I don't. I'm a technical trader, so I never follow the trade. I never follow the news. Yeah, as I showed, GBP JPY crashed as well. This was a huge trend down, 1500 pips. If you could get this trade, it was pretty obvious you could make a lot of money. But there is something called trader sentiment, which IG broker and I think FXCM as well, they publish it. Whenever the traders go long, the big banks go short. So that's what happened here. Every time that the market went back up, like in these areas, and the traders thought that the market had a reversal and they're gonna make a good money, the market crashed and took all the stops. And that's what happened here as well. So they go against you. It's a zero-sum game. Remember that. You are fighting against the best. That's why many traders lose. They don't know how to fight. Same happened in GBP USD. People think that these are gonna be like a reversal signal, and RSI and these stochastics gonna produce some signals, but people don't know that the market, Forex market, doesn't have overbought and oversold. It's not a stocks. It doesn't have an intrinsic value, so it can't go down as much as they want, as much as they push the price down. So there is no overbought or oversold in Forex, remember that. So that's why the stochastics and RSIs don't work. Every once in a while you win, but after some time you're gonna give it back, plus your shirt. So this crashed as well. People gonna get, okay, market is overbought and oversold in this area. We're gonna get another reversal trade, and then market comes back up, poof, crashed again, and it's gonna take their stops. So be careful. GBP AUD, as you can see here, every time market comes back up, people think that it's gonna be a good trade. Boom, market crashes. Next one probably is gonna be another couple of bearish candles, and it's gonna take all the stops. But in this pair GBP AUD, as you can see, we have very big fluctuations. One, and now we are at this level. The next one is gonna be probably at this area, and the top one is there, a small one and another one in here. So you see these 5 levels, market has moved between these 5 levels. So if you can see these levels and you can draw these lines, don't you think that the big banks can see these as well? Big hedge funds, all of them see these levels, and all of them know that the trader is gonna take these trades, reversal trades. And the brokers who have access to all the majority, all the compile of the trades, they know that how many of the traders go long, how many of the traders go short. So if whenever the majority of the traders go long, they crash the market and they go short. So that's why they take all the stops. So now we have these big candles, the bullish candles. Let me zoom in. These big bullish candles here, and everyone after this pin bar, everyone thinks that the market's gonna go up. I'm not saying it's not, maybe it does, but you're gonna have another of these big pin bars or these candles, and they're gonna take all these stops. So be careful when you either tighten your stops or get out before it crashes. Have a small target and get out. Generally, continuation trades work better because the market is trending very fast and you can get on. It's like a train. It doesn't stop very fast, but reversals, as you can see, this is a reversal here. This is a reversal, this is a reversal, another reversal. Probably this one's gonna be a reversal. Every time you take a trade down here, the market crashes, every time. And traders think that this choppy gonna go up, and it's gonna go up to the previous like a resistance line. But boom, it crashes. So be careful what you do. Be careful about the reversal trades. Reversal trades are probably, if you have a short target, they work, but normally you're gonna lose a lot. So be careful. Continuations work much better. The next one, let's go to the AUD pairs. This is AUD USD. This one had a very beautiful crash. I took a long trade, I think, because the market was going up. If you remember, we had this higher lows and higher high, and the last higher high. I took a trade, I think, after the close of this candle, and I had this small here. It came back down and hit my trailing stop. I didn't lose anything, but I made a small profit, not as big as I wanted. And after that, this big candle here moved and hit my target. So actually the market moved to my target, but after I got out, after the price pushed me out, it hit my stops. So at least you don't lose, if you trail your stop, but be careful. What I found is that the ATR works much better in these conditions. If your stop is like a one-time ATR and your targets are twice the ATR, something like that, you figure out what you do with your strategy. But the ATR is the range of the market, how much the market moves every day. So if you have like 1 or 1.5 times ATR for your stops and like 2 to 3 times of ATR for your targets, probably in the long run you're gonna be profitable. You're gonna lose some trades, that's the nature of the market, but in the long run you're gonna be very good profitable. The next one is AUD New Zealand. As I said, these two currencies are very closely related because New Zealand is beside Australia and is very dependent on the economy of Australia. So as you can see, very choppy. I can't get any, doesn't matter how you get in. If you're working on a daily chart, it's gonna hit your stop loss or trailing the stop, doesn't matter. I couldn't get any trade. But generally the New Zealand and Australia pairing with the other currencies work almost the same. So I have only Australian dollar, and this one is only for checking what's going on. Let's go to New Zealand CHF. This crashed as well. As you can see here, this is a very obvious proof that they work. The banks, market came down, crossed the 21 moving average, came back down, have this big pin bar here, and everyone thought that this is going to be a continuation trade. Probably some people made some money small here if they scalp on daily chart. Some moved their stop loss to break even, so they didn't lose, but many who didn't, many who had probably their stops low as here, or maybe lower than this pin bar, the movement here was not enough to trail their stops. So the market crashed and took their stop and they lost a lot. There is no set rules for putting the stop, but you must at least get some, just exit half of your trade and continue with the other half. Even if it crashes, you have some money on the table. Let's go to the CAD CHF. This is a very good pair, it goes up, down, up. See this, we need these trades. These are very good trades, Every time it goes up, let me mark the pin bars, mark the candles that I normally enter. This big one here, this big one there, another one probably here, or maybe even that one, that big one. Maybe these two pin bars are good. These two big candles are good as well. And this big one. See, this one is a very good example of how you can rely on the small, breaking the small resistances, See these resistances, and those big candles break these resistances. Here is not very good obvious resistance, and here as well, but on the other ones it's pretty obvious. Market comes back, touches, goes down. See, it broke, comes back up, and then crashed. It broke this level, came back up and touched the resistance and crashed. Even in this one, it broke up, came back down, and then went all the way up. So these ones, every time it comes back, you can enter and make a very good profit. See these pin bars here? This is a very good continuation trade. You draw this line and then you enter. So this way, you don't need many indicators. A moving average is enough. You don't need really fancy ones filling up your charts. And the next ones, the last ones are silver and gold. Silver, this is the very obvious, clear example of taking stops. You know, everyone thought, including me, okay, I'm not a genius. I trade what I see. You see this little resistance here, when this broke, and the previous one was as well, every time it breaks, it goes up to the, as I said, this is a kind of a flag, you know, and there's a flag here as well forming, so you can see that. So when this flag formed, and everyone thought after this candle that the market's gonna go up, but after that, no matter how far your stop was, this big two pin bar, the last two bars candle took all the stops, and everyone is out. And I'm pretty sure in the next week market's gonna go back up. Everyone is out, the banks push the price higher. The silver is gonna go up, and gold as well in the next couple of years. So that's the uptrend market. So let's see what happens. I'm pretty sure gold is the same without even looking at it. Yep, you see, I had a trade here, this candle, up trade, a buy. This one went up, came back down. I lost some money here because I exited there. It didn't hit my stop loss was down here, so I exited there halfway. I didn't want, if a setup doesn't work out, you better get out before it hits your stop, okay? That's what I did. I exited here. It went back up again, and I thought, oh my, it reached my entry levels. I could exit it there, but after that, you know, it crashed again, and then going up, and this last pin bar shows that the market's gonna go up. So yeah, these fluctuations are, they collect all the money, they take all the stop losses, and then the trend starts to move in the direction that you expected and you knew it's gonna go, but it didn't. You are not on that train, you know. That's how it works. Be careful and figure out these kind of small resistance levels. After that, you can get good trades. You know, now every time it touches this resistance up here, it comes back down. You need a clear confirmation that this is gonna break this level and it stays on top of this level. Then you can enter. Maybe put a pending order. Maybe I do this. I put a pending order on top here, maybe 10-20 pips above these candles. And when the market goes up, I move my stop loss from down here to this level, and then just keep moving. I move my stop loss as it moves. Okay, this was for this week. If you have any questions, please ask in the comment section below. And if you haven't subscribed to my channel, please do subscribe. A lot of videos I'm recording at the moment about the indicators, how you can trade and how you can get clear signals, which one work and which one don't work. Very good videos I'm recording. As soon as they're ready, I'm gonna publish them. So yeah, subscribe to my channel and see you around.